All right, welcome to The Explainer. So, one of Japan's biggest tech companies just made a massive move. But not in Japan. We're talking about PayPay, the payment app that's pretty much everywhere. And guess what? They're headed straight for Wall Street.
And that brings up a pretty big question, right? Why would Japan's #1 payment app decide to go public in America? A place where, well, nobody uses it. We're going to dig into how they got so huge, so fast, and what this whole Wall Street gamble is really all about.
Okay, so first things first, let's just get into the big announcement. I mean, people have been speculating for months, but now it's official. PayPay has kicked off the process to list on a U.S. stock exchange. And that's a huge deal for a company that was, built from the ground up just for users in Japan. So, on August 14th, 2025, they took that first big formal step. They filed what's called a draft registration statement with the U.S. Securities and Exchange Commission, the SEC. You can basically think of this as the official starting gun for their whole IPO journey. Now, here's a really interesting part. They did what's called a non-public filing. And that's a super strategic move, right? It lets them get the ball rolling kind of quietly behind the scenes. It means all the juicy details, we're talking share price, how much the company's worth, all of that stays under wraps until they're totally ready for the big reveal, once the SEC has had a look, of course. Okay, so this just begs the question, doesn't it? How does a company that literally didn't even exist before 2018 get so big that it can even think about a US IPO? The answer, well, it's a story all about incredible speed and just massive scale.
And it really all starts with this one number, over 70 million. That's how many registered users PayPay has in Japan. I mean, let's put that into perspective for a second. That is more than half the entire population of the country. For a domestic service, that is just staggering.
And when we talk about their position in the market, it's just total dominance. PayPay controls a whopping 65% of the entire QR code payment market in Japan. So they're not just the leader, they basically are the market. They're bigger than all their competitors put together. It's wild. So how in the world did they pull this off? Well, they used a classic, high-risk playbook that comes straight from their parent company, SoftBank. In Japanese, it's a strategy called menyo toru senyaku, which basically means the land grab strategy. The goal is super simple. Grab the territory and do it fast. And oh man, they were not kidding around. Starting back in 2018, they just burned through billions of yen on these huge cashback campaigns. You probably remember the 10 billion yen giveaway, right? It was all about getting as many users and merchants as they possibly could. And yeah, it led to massive losses at first, but it worked. Their market share just exploded, shot past 60%, and the bet totally paid off. By 2025, boom, they hit their first full year of profit. Which brings us right back to the central question here. If they have such complete control at home, why not just list on the Tokyo Stock Exchange? Why go through all the trouble of listing in America, a country where they don't even operate? Well, it really comes down to a big strategic trade-off. See, the U.S. market is just more experienced when it comes to figuring out what high-growth tech companies are worth. American investors, they get the whole fintech model. They've seen it before. And that could mean a way higher valuation for PayPay and access to this giant global river of cash. And look, PayPal has been crystal clear about this. A spokesperson came right out and said they are not considering a Tokyo listing right now. The message couldn't be clearer. They want to play on the world's biggest financial stage. They want that global capital to fund whatever comes next. Right, because an IPO isn't just about a big payday for early investors. It's about building a war chest. It's the fuel for the next big chapter of their master plan. And believe me, for PayPay, that plan is so much bigger than just letting you scan a QR code to buy a drink. The ultimate goal here, the big vision, it's to turn PayPay from just a payment tool into a full-blown financial super app. We're talking about one single ecosystem that can handle literally every single financial need a person has. And you can see they've been building towards this step by step for years. First, they took over payments. Check.
Then, in 2022, they brought the PayPay card into the ecosystem. By 2024, they added banking services, then securities in 2025. You see, every move is about adding another crucial piece to this massive financial puzzle, all under that one super powerful PayPay brand.
So by pulling all of these services together, the goal is to create this unbeatable one-stop shop. Just think about it. They can use all the data from their 70 million users to offer personalized loans, insurance, investments, you name it. This creates a massive competitive advantage and lets them go head-to-head with the other big ecosystem giants in Japan, like Rakuten and SBI.
So when you boil it all down, this IPO is so much more than just raising money. It's really a strategic pivot. It's the moment PayPay officially transforms from just a Japanese payment app into a true financial platform, one that clearly has global ambitions. And so that leaves us with the big, lingering question, doesn't it? Choosing to list on a U.S. exchange when you don't have a single U.S. customer, that's a seriously bold statement. It just screams ambition. So, is this the first step? Is PayPay about to take its wildly successful playbook from Japan and try to go global? That is the billion-dollar question that everyone on Wall Street's going to be watching.